Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at GWAV technology solutions.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis.
Okay.
This one is, well, it's a story defined by a radical contradiction. A real Jekyll and Hyde situation.
How so?
On one hand, you have a company with, absolutely stellar operational performance. The kind of growth numbers that should have investors thrilled.
And on the other hand?
On the other hand, the market is just completely obliterating the stock because of a fundamental failure in, governance and compliance.
Right. So a classic high-risk, high-reward scenario where it seems like the risk is definitely winning right now.
It is. But let's start with that massive upside first, because you really have to see it to understand the dilemma here.
Okay, lay it out for us.
GWAV recently updated its full-year 2025 revenue outlook. They're projecting between $47 and $50 million.
47 to 50. And what were they at before? For comparison.
Well, to put that in perspective, their reported revenue for 2024 was about $33 million.
So, wow, you're looking at a jump of what, 34 to a full 50% year over year.
Exactly. That kind of revenue acceleration, especially in the metal recycling sector, it's highly unusual. It tells you they're grabbing market share fast.
That growth figure alone would turn heads, but I'm guessing there's more to it.
Oh, there is. The real story is the profitability of that revenue. The forecasted gross profit margins on their core metal products.
Yeah.
They're hitting an exceptional 40 to 45%.
40 to 45% in recycling.
I know. That margin figure is the genuine headline.
What are typical margins in that space?
Usually you're looking at something between, say, 15 and 25%. Hitting 40+% suggests two critical things. First, they're using some very advanced, cost-effective sorting tech. And second, they are locking in high-margin, long-term contracts, the kind that insulate them from daily commodity price swings.
And do we know who those contracts are with? That's always the key.
We do, and that's what really solidifies their competitive moat. They've got key business with massive industrial players like Nucor Corporation.
A huge name.
A huge name. And maybe even more important, they have contracts with multiple U.S. government agencies.
So that client list isn't just about revenue, it's a stamp of approval. It validates their quality and reliability.
Precisely. And that government connection ties directly into their biggest advantage. GWAV's whole model is built on 100% domestically sourced metals.
Which is a huge deal right now, with all the focus on reshoring and supply chains.
It's not just a marketing tagline, it's a strategic shield. With the current geopolitical environment, tariffs on imported metals, especially from China.
Right.
A domestic supply is at a premium.
So while their competitors are getting squeezed by tariffs on imported metals, GWAV is sort of sitting pretty, supplying exactly what U.S. manufacturers and the government needs, and at those premium margins.
It's like a perfect economic storm is hitting their rivals, not them. They are perfectly positioned to capitalize on these regulatory tailwinds that create a structural advantage for them.
So operationally, this thing looks like a monster, a top-tier performer, which begs the question, if the fundamentals are this strong, why isn't the stock price reflecting that?
And that's the billion-dollar question. Let's shift to the market's reaction, the technical view.
Okay.
As of late November 2025, the stock has been trading pretty tightly, somewhere in the $4.50 to $5.30 range.
But the analysts are seeing something else.
They are. If you could just strip away the immediate compliance crisis, the average price target is sitting around $8.45.
So significant potential upside if, and it's a big if, this current crisis gets resolved.
A very big if. We've even seen some models projecting targets over $10 within the next year.
And I'm guessing you can see that bullishness under the surface in the charts, despite all the noise.
You can. We're seeing models confirm a strong short-term rising trend. The 50-day moving average is crossing above the 200-day, a classic golden cross pattern.
Which usually signals that some deep underlying bullish momentum is trying to break through.
It's trying, but we have to stress the sheer terrifying volatility here. This is not a comfortable stock to hold.
How volatile are we talking?
Daily price swings frequently exceed 6%. Weekly volatility is averaging over 14%.
Wow. Okay, so why so much movement?
It's partly the crisis, of course. Investors are reacting violently to every piece of news, but it's also likely a pretty low stock float. which means every trade moves the price dramatically.
And it suggests a lot of speculative money is in the mix here, people trying to get in ahead of a resolution.
Exactly. Which brings us right to the core issue, the elephant in the room.
How can a company with 50% growth potential and 45% margins see its stock fall over 94% year to date?
And there it is. That collapse isn't driven by operations. It's driven by the Nasdaq compliance crisis.
This is the critical headwind, isn't it? It just overrides everything else we've talked about.
It completely overrides it. In November 2025, GWAV got a formal non-compliance notice from Nasdaq.
And the reason was what? The filings.
The reason is the problem. The failure to file not one, not two, but three required quarterly financial reports. The reports for March, June, and September of 2025.
3 quarters? That's
Yeah.
not a clerical error. That sounds like a systemic failure of internal controls.
That's how the market sees it. Missing 1 quarter is bad. Missing 3 in a row suggests a severe breakdown in financial reporting and, frankly, governance.
It's a crisis of confidence.
A total crisis of confidence in management's ability to run the company properly, no matter how much scrap metal they're selling. A 94% stock decline is the market screaming that the lack of governance outweighs any operational success.
Okay, so walk us through the timeline here. What's the immediate pressure point?
They did file the March report pretty quickly in November, but that still leaves 2 quarterly reports outstanding.
And the stakes are? What? Their listing.
Their entire listing on the Nasdaq, the lifeblood of the stock. The crucial do-or-die date is the upcoming Nasdaq panel hearing.
When is that?
It's scheduled for January 13th, 2026.
So just around the corner, the company is basically on trial for its life on the exchange. What do they need to do?
It really hinges on one thing. They have to successfully file those 2 remaining quarterly documents before that January 13th hearing.
And if they manage that?
If they catch up and show a credible plan to fix their internal mess, the panel will likely grant them a reprise, an extension at least.
And if they fail, what's the real-world consequence of being delisted?
If they fail, the stock gets moved to the over-the-counter markets, the OTC or the pink sheets.
And for an investor, that's just devastating.
It's hugely detrimental. Liquidity dries up. It becomes much, much harder to buy and sell shares. And crucially, most big institutional investors, mutual funds, pension funds, they have rules that prevent them from holding OTC stocks.
So they would be forced to sell.
Forced to liquidate. You lose that entire institutional support structure overnight, which could trigger another sharp decline.
It's the difference between driving a Ferrari on a highway and trying to push it through a sand dune.
That's a perfect analogy. The potential is still there, but the mechanism for realizing that value is just broken.
Okay, so let's look past that critical January 13th date for a second. Let's assume, for the sake of argument, they get their act together. What catalysts are waiting on the other side?
The first major piece of good news would be the Q4 2025 earnings report. That's expected around mid-February 2026.
And management is guiding for strong numbers there.
They've been signaling that this report will confirm that record growth trajectory. If they file it on time and the numbers are as strong as they say, it would be a massive confidence boost. Proof that the engine is still running.
And what about new business?
Their contract pipeline seems very active. There's a high probability they'll announce new large government and industrial contracts within the next 3 months.
More of those high-margin, long-term deals.
Exactly. Securing more of those, especially with federal agencies, would just further confirm that their competitive moat is real and sustainable.
You also mentioned the regulatory environment as a tailwind. Anything specific on the horizon?
Yes, we are expecting some favorable rulings on domestic metal recycling standards and possibly new tariffs on imported materials.
Which would just pour more fuel on their fire.
It would be an immediate structural boost to their operating margins. It would make that 45% margin profile even more attractive.
Okay, finally, let's touch on the speculative buzz. The rumors that are fueling some of that volatility. What's the chatter?
There's definite market chatter, though it is unconfirmed, about potential strategic partnerships.
What kind of partnerships?
It could be a joint venture with a big customer, maybe even Nucor, or it could be a capital infusion from a strategic investor who sees the value here if they can just fix the governance.
Someone to come in, inject cash, and demand a board seat to clean things up.
That idea is certainly fueling some of the speculative bets right now. And speaking of governance, all this pressure from the delayed filings is having an effect internally.
I would imagine so.
There's a lot of speculation about a potential management restructuring. Some investors believe a change in leadership, especially around financial oversight, could be seen as a huge positive,
It would signal that they're finally taking accountability for the failure.
which is a necessary step to regain any kind of investor trust.
So, to summarize this incredibly complex picture for our listeners,
Hmm.
how do you weigh this operational dream against this regulatory nightmare?
You just have to accept that. For right now, this stock is trading on a binary regulatory outcome, not on operational metrics. GreenWave is an operational powerhouse, high growth, amazing margins, a great moat.
But none of it matters.
None of it matters until the compliance issue is resolved. That success is locked away, and the stock is trading like a distressed asset. The immediate future is 100% dominated by regulatory risk.
So the key takeaway for you, the investor, is that the outcome of that Nasdaq panel hearing on January 13th, 2026, is the only data point that matters for the next 6 months. It doesn't matter how strong their Q4 earnings are. If they get delisted, the stock will suffer.
Right. The question you have to ask yourself is, do you bet on management's ability to clean up 2/4 of accounting failure in just a couple of months?
That date is truly the moment of truth. The risk is either lifted entirely or it gets massively escalated.
It's all or nothing.
Don't miss our next analysis. Make sure you hit that subscribe button to keep your portfolio smart and informed.